All right, guys, what's going on? Today is, what is it today? The 15th of February. And yeah, today I have a doctor's appointment a little bit later for all this post-COVID stuff, for the long haul symptoms that I'm experiencing right now. So I'm just going to do it right now, quick, at least pump out a video quick before, or so then you guys can see what happened today and what was good. So I'm going to start off just with yesterday's analysis. Like, this is what we were looking at yesterday. Okay. We were looking at, there's a nice hidden order block right here, or hidden base right here. I'll show you what I mean. Right here. Okay. Hidden base right there. Just refined it to this wick because it was in there. Big figure 1,300. Now, something that's interesting about this that I brought up today is that, listen, we're in between two major levels right now where we had a sweep on buy side liquidity. We have an institutional swing point here, sweep on sell side liquidity, institutional swing point here. So what do we do? And ultimately what you have to do is you have to play intraday liquidity as opposed to looking for major swings, because there's multiple scenarios, right? We're literally at 50% of the swing. You can see it right here. We're 50% of the swing. The next move, because we're in discount as soon as we break below that, the next move is likely to be up here, to run these highs, right? Run this daily high into this fair value gap. Then we can go both ways essentially, right? We can come all the way back down here, start filling up imbalance right here, right? We can reverse from here and go up. We can come back down. Like, there's so many options of what can happen. And these are just not scenarios that you want to definitely, or you want to be trading, right? When we're down here, for example, my first area of interest that I'm looking at is to come back up into this level, meaning I have this much room and it's only one-sided. So for these days, I can be extremely bullish, and I can be looking for bullish the daily cycles in order to get us up to there, right? So that's the idea of it. But right now we're stuck. And when it's like this, don't get frustrated. Don't try and predict, don't hold. I mean, I guess you can do whatever you want, but I wouldn't be holding this way and I wouldn't be holding this way. There's no, for me at least, in what my perception of probabilities is, that the probabilities are not in any favor of any side right now. And so therefore we're playing intraday liquidity. So we mark out significant levels on the higher time frames and we just play off of them, and we play liquidity pools. So just want to talk about that a little bit before we get into it. But you can see, so we swept that, and then we were looking for longs in and around the 1300s area. And I said, yeah, we were having divergence from this. Now, this doesn't mean, right, that when I do an arrow like this, it doesn't mean it's going long from here. I said it in a thing. I'm like, this could easily just fill up to this block right here, come back down. We front run the 1300 level, and we still have this divergence, right? The divergence is still intact if price goes up and maintains this low. So it can come back down into here and then go like that. This is still a viable divergence, right? So until it breaks that, then the divergence is gone. And until that happens, then we have to have that bullish scope. Yeah, sure. You could have entered longs here and then you get stopped out at break even, or you get stopped out in total and you say, oh man, I should have just followed order, or I should have just followed bearish order flow. Sure. But you have to understand that this is going to be, eventually we're more likely to come out and take out these levels, right? At least, maybe not this one, but at least this one up here where we have this massive imbalance. Okay. So just want to make that clear. But again, this was the viewpoint from yesterday. So now we scroll down to today, and you can see, good morning, guys. Yesterday's forecast was pretty bang on, stayed in that 4-hour level. So first off is the daily here. Again, major sweep. We're in this breaker block. We should be remaining bullish until we at least get into that fair value gap, and that's essentially what I'm saying here, right? Nice breaker. Got a nice response to this level. Doesn't mean that we're officially the moon boys and looking to aim for new highs. No, you can see in regards to the daily bias that we're still at a standstill, significant high. Everything that I just explained, right? I don't have to go through it again. So let's go to the 4-hour. You can see here, we have our structural points, nice structural points. We dabble into that zone, which is the refined of that 4-hour. You can see the daily breaker here. Look at the wicks and look at the bodies. Respect, 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 respect. The wicks sure are getting through, but the bulk of the volume is staying within that daily breaker. It's also respecting that 4-hour order block. So just good to know. So we know, for me, I'm anticipating what? This is going to be that trading range now, right? The bearish trading range. And let me just get my tool out here. We have a consolidation, we have a sweep, we have a breakdown, high, low. This, whenever this low ends, which we're anticipating right here, we're anticipate, or what we can expect is a retracement back up into premium, right? Where's premium? Where's the first level that I'm looking at premium? Well, somewhere in here, right? We have this nice imbalance right there. We also have a structure inducement right here. I know that there's going to be smart money traders and just traders in general that are saying, hey, look at this, this is structure. This is structure. We have to take it. Don't get me wrong. You'll see from today, I actually did take a trade there, but it was a pullback trade to where? Imbalance. And you'll see on when we dive into it a little bit more. So you have to understand that direction for this day, we set up a nice institutional swing point, 1, 2, 3. So now we seek liquidity, right? We're seeking liquidity to where we have the structural inducement. We have this red box as FVG. We have our point of interest up here. We have even more points of interest up higher. But again, that doesn't matter as of right now. What matters right now is that is the next move, right? I think a lot of the times is we get ahead of ourselves, and especially if you're starting, it's like you're trying to anticipate 8 moves ahead, being like, well, it's like, oh, I want to see it get up to here, or I want to see it get up to here, and blah, blah, blah. No. What is happening right now? What's going to happen, or what do you anticipate is going to happen in this day, right? Where is price likely to reach to today? Not tomorrow, not the next day, not the week after. It's about what's going to happen today. What's the highest probability scenario for today? For me, the highest probability scenario was this today, was that eventually we're going to hit this level somewhere in it. We're going to get a retracement and we're going to get up. You'll see later, it was all called beforehand. I'm not making this up now in hindsight, right? You can see it right here, 6:31 a.m. Okay, so we'll dive into it. But again, that's what I'm thinking, right, as we're going on. Next one is the 1 hour. Right here, you could see it just perfect, right? We have our daily breaker here, right? We have 1, 2, 3 runs on liquidity, tagging that level. We break up. Here's our breaker block right here. We dabble into it, a nice little imbalance / order block right at that same level. We get a nice inefficient move out to what? Break structure. Also take out a liquidity pool, right? Structure highs are going to be liquidity pools. So structure highs. We have another structure high right here. And this is something I actually missed right here on the 1 hour, but right here, you can see it, right? We have a beautiful, what? Hidden block, hidden order base, hidden order block, or hidden base. I always get those confused. Excuse me. Or we have just the last candle, essentially, that fills up all of that's the imbalance fill, right? So we have that whole candle. So you can use either one. I just used the base, the hidden base there, just because we had the big figure right there lined up right with it. So I knew, or I was anticipating that we didn't see above that. But anyways, I was actually looking at a one right here. There was another base on a smaller time frame right there that I was looking at because it was directly above some significant highs. And I thought that potentially we could get a retracement from there. It ended up coming back up to here though. And this is where the short actually came from. Okay. And it makes sense now in hindsight. I got to be a little bit more aware of that. It is what it is, but I like how here we dabbled up into that fair value gap. This was the candle to do it. And so that should have been, I should have been a little bit more aware of that, but that's fine. Okay. And so that just leads us to this, right? Where we have our target for the day, which is upside. We have structure developing nicely. This is London's low. It should probably remain right here. You can see this was a significant liquidity pool. We have an order block here that just didn't get tagged. You see that's where the reaction came from. We didn't get any strong moves down from it. However, I was really liking how price was developing on the smaller time frame. So I actually took an entry that broke even here. Okay. And then this was that second area right there. Right. So this was that second area, that hidden base right there at the 600 big figure there that I was looking at. But again, all called beforehand. You can see right here, right? 646. This is roughly at 6. You can see 6 o'clock is right there. So it's somewhere there. right? Now you might say, Matt, what are you talking about? You said you were going short. You can see how I noticed it right here now. I pointed that out, that block. Okay, read this. Think about how retail trades this pattern right here. I'm not saying take a sell. I'm just saying this is a textbook retail buy. Be cautious. Obviously, we're bullish until 3,900 still. I just want to see some retail manipulation first. Okay. What we have here is we have this bullish, very bullish candle, consolidation, bullish run. If I draw it out here, what does that look like to you? It's a bull flag, right? Classic retail deception. We come right up into a key level here. We have our inducement up here. And so what I'm seeing, and this isn't support and resistance liquidity. I think I show it a little bit later. We'll see. If not, I'll dive into it on the charts. You can see, so this is where people would be buying at. So this is where we want to be selling. And then this is where our targets want to be. Of course, I was targeting this S&R lick, and then I was done, right? I was done. Again, you'll see that. Okay, so just keep that in mind. This is what retail is seeing. We want to see some retail manipulation before we get into our positions. And so you can see this is taken on a demo, like on a demo. I actually took it on my real account, but I just took it on demo so you can see that I actually took it as well. And you can see where I got in. I got in right here where we broke, came back up in, and I got in on this candle here. Stop loss just above there with, I put it up, it was here with spread right there. Okay. S&R look, you can see, look at that. We come down, right? So this is going to be our trading range, right? Trading range low, trading range high. But S&R liquidity right here where it turned support. And then you can see this low basically contained all these lows. So I wanted to see that low get taken. And that's pretty much it. So this was a really nice entry here. Beautiful. I think it ended up being just about 10R to get down to the take profit. I actually ended up taking it out a little bit higher at 220 because after I saw this, and I saw something very key right here, which I'm not going to go into here, but it's just another point of interest that I like to see. I saw it react there and I was like, you know what, I'm just going to get out. It's literally so close. It's like 2 pips away from my actual take profit. I don't really care. And again, I don't know if it's even going to get down to there before going up, and we're bullish for the day. So, I mean, it all made sense. I was just taking this pull back down, take out this S&R lift. Okay. So that was the idea. What else you can see here? Perfect. Yeah, we get down to that S&R liquidity right there. And I say, look at where Dixie is. We hit the final target, right? So be aggressive with your partials. Dollar index filled, euro didn't, right? It still had a lot of room to go. What ended up happening in the day is that dollar index ended up breaking above while euro US dollar was right here. That's when I knew that I was like, okay, I'm going to take up my position because we have a potential divergence forming that is going to validate our what? Our long bias for euro. And so because I saw that diverging, we hit our points of interest on dollar index already. I just pulled it. I pulled the whole trade right here. Okay. I pulled the whole trade, and that was my logic behind it. So I hope that makes sense. That's how I use dollar index in unison with euro US dollar. Right. And so going back to what we said about the longs, right? When we said that this is going to be our trading range right here. Okay. This is trading range high, trading range low. Look at this. We have that OTE order block right here, right? Order block, OTE, very clean leg. We know we have higher time frame objectives to hit. So that's what I would be anticipating for the rest of the day. I didn't get a good entry down here. I'll be honest. I didn't get an entry down here. That's fine. I didn't want to take an entry with a stop loss of like 12 to 15 pips. I just didn't want to take it. If it went down here like this, came back down here, I would have just had a limit on the very extreme point and I would have taken that. Didn't get that. So I was waiting for a little confirmation. Didn't get anything that I was liking to see. Again, we did get that divergence, right? Dollar index actually broke. So dollar index would look like this if we inverted the chart, and EU looks like this. Okay. And so that just is showing that smart money is accumulating longs. And so on euro. And so that's what we want to see, right? Upside. This was the number that was called out at the beginning of the day, 13,900s, right? We have a nice little imbalance fill up there. And basically this fractal right here is, or sorry, this move right here, this whole thing is this fractal right here. So if you study this, I'm not gonna tell you what it is, because again, this is one of my main setups. But if you study this here, you'll understand this here, the bigger one. And so that's why I don't mind taking this short, but I really want to see those longs because they're both very high probability trades. Okay. What else? Is that it? I think that's all. Yeah. So that's all. Again, why did I take profit at 32? I called it out. Personally, I closed the position at 32,220. Okay. So let's just dive in. You can see it. It's absolutely ripping right now, but let's go. Right. So we have this wick. This is going to be our main level, our main point of interest. You can see right here, we have our breaker block right there. We're closing within it. We have fair value gap up here, just like that. So likely that we're going to be dabbling up into that. And just so you know, the higher time frame bias for me, if I'm taking any biases right now, is that this right here is a market maker buy model, and that this is going to come up here. So I am more bullish than bearish right now. I do see the bearish scenario, however, and that's why I'm not holding to the moon. I'd rather see a nice breakout of this first, and then at this consolidation level, and if we get a nice buy model here, I'll take that and I'll hold that one up to here, right? So that one will be good. But I also see this imbalance down here getting taken. So that's the reason why I'm not holding for the moon. And like I said, right, we take out highs, we take out lows. We didn't break structure here. This was just a sweep on structure. So this could easily continue down. I want to see this being respected first though. So anyways, just what's it called? I was digressing there. So we have this breaker block. We come back down. You can see here, what do we have? 1, 2, 3 institutional swing point right there, confirming that this is a decent level. We have what? Imbalance. Let me just mark out this imbalance with, or this, what's this? The hidden base right there. I'll mark out that. And that's where our target was, right? So we know all that. 1 hour. Look at that. Beautiful block. We can move it down a little bit more. Look where we're going right now, guys. Literally bang on to the analysis, right? Bang on. We have this massive imbalance here that we can start to look at filling. And this was the level that I was looking at. This was the level that we're looking at, right? If we take this, we take this, you can see 1400 basically right up in here. So that's what I want to see. It doesn't have to get up to there. It could just dabble into this imbalance right here, right? Just above. But I do want to see it get above this level and dabble into this imbalance. Okay. So I do like that. Let's see, do we have any confirmation or anything here? So look at that. At 50%, we have essentially the mitigation block right here. I would actually, when I use mitigation blocks, I use the actual candles typically. I don't use the bodies, but I mean, I don't use the actual highs and lows, the wicks. I use the bodies. But you can see here that wick is lining up pretty nicely with that one target. So the negative 0.5 target. So that's good. You know, we hit our first target on the negative 27. Would not be surprised to see this continue. Let's see if we have any confluence there. No, not really. I do like this though, just with the bodies. The bodies is better for targets, or that's at least what I've been experiencing. But again, this is just a beautiful, beautiful formation. I really, really like what's going on here. Very bullish, at least up into fill that level. So just super nice. And yeah, sorry for my dog. Again, every time, seems like every time I record a video, the guy starts barking. Okay, so what did we have here, right? So this was the level that I was looking at before, okay? And on this broker, it actually tapped it. So I wouldn't actually be looking at this if I saw that it tapped. Potentially there was something on the smaller time frame that I was looking at. Let's go 5 minute. Oh yeah, it was this imbalance. Okay, there was just a little imbalance fill, and I knew that there's a little order block there. This was significant liquidity pools, right? Significant liquidity pool right in the middle of Asia there. We have some significant highs there. And you can see that we just tapped it to perfection, and then we started falling. So basically at this point, there was actually a really nice entry right here, right? There was a really nice entry. I wanted to see all of this get taken, right? So we knew that this was going to be that target. What ended up happening? We break above here, and look at how many sweeps we took to get up there, right? 1, 2, 3, 4, right? So 4 major sweeps, and then we had one final last one there, break back down, and then what happened? 1, 2, so we have 3 runs up into where? This little hidden base. I would personally just use this whole thing, okay? So we had 1, 2, 3 runs. Very inefficient candle. This is beautiful. So if you entered on this one, then that's fine. If you entered on this one, also fine. Okay, we'll just say we entered on this one. This one fit our criteria, right? We do that. Let's add, I don't know how much your broker has for spread, but we'll just say it's 0.3. So let's go 2, what was it again? Okay, we'll just say 0.3 like that. 0.3 spread. First level that I'm looking at is what? Weak low right there. Okay, weak low right there. So this was the trade. I personally wasn't even on the computer yet at this point, so I didn't take it. I would have taken this 100% if I were on. This was textbook trade to me. The one I did take was this. I saw how it was mitigating. It was mitigating everything that was up here, right? Everything was being mitigated up here because you can see it was mitigated there, coming back down, remitigated it. We have this sweep right here. We had this sweep right here, this break of structure right here. So to me, I just wanted to get in on this because I thought potentially we were coming back down from here. What I missed, and I'll show you one of my mistakes here, even though again, it was break even, I don't really care, right? But it was a mistake, or it was something that I missed. And obviously if you miss it, then, and you didn't follow the process entirely, then, you know, you just got to learn from it and you got to adapt. And so that's what happened. So you can see here that this was actually a really nice trade, right? I actually, to be totally 100% transparent, I didn't enter right there. I entered right here at 50% of that imbalance instead, because I try not to over refine. And like, I know that it's going to probably reject somewhere in here. It doesn't have to go mitigate whatever you think it's going to go mitigate. So I actually took a 3.1 pip stop. That's what I took. And I said, by the time it gets down here, I'm going to do what? I'm going to manage. I'm going to manage my position, because if it fails to get through here, then what does that make this? If this fails to get through this bottom, what does that make this high? It makes it weak, right? So if we fail to get through this low and we start coming up like it did, then I know that it's coming for this next. And look at the available room there on my stop. I don't want to take that risk. So essentially what I did was I just moved it to break even and I just let it go. I didn't take any profits here, although I should have in hindsight. And the reason being is because of two things. One, when I look at the dollar index and when I pull up the dollar index, I have so many people also asking me, how do I do this? You press compare dollar index. Oh, and then you go new pane. Okay. And that's how it gets down here. And then what you do is you can go settings, style, turn it to candles, and then you just color them the way that you want. If not, you can just turn it to like a line chart, do whatever you want. Okay. But I like to do the candles because, again, I like doing my analysis on dollar index down here as well. But what's something that you see? For me, something that's super important that I see is this. Okay, this low and this low, right? So this creates a higher low. If I go divergence, and now this high is equivalent to this high and this high. It makes a higher high. What ends up happening is that right here, we break structure up. We have an inducement here. Okay, so, and we took out this low already, this weak low. So this was actually a potential area to look for buys. However, I wouldn't have taken these buys because my bias really was that we needed to come fill this before. I didn't want to see this trend keep trending like that. So I personally wouldn't have taken those. However, it's a completely valid trade. And it just made me realize that I should have, this was a valid trade as well, but I should have been much more aware of this. And that way I could have either hedged in a bet here, right? I could have hedged in a bet here and took this up to where? That next zone, right? Which was at the 1 hour fill. If I just mark it out right here, which is at the next 1 hour fill. I'll just put it on the hidden base there. Okay. Which if I go to the 1 minute, back again. So that means my next target would have been up here at that hidden base. And I could have done a good couple swings here, right? First of all, if I hit this one, I would have been laughing because this was a really nice trade. 1, then you hit that one, 2, 3 back up. So this is how you ping pong, if you're wondering, if you're curious. And then, yeah, after we hit this level, I really, really, really liked it. Now I was like, oh, these are all going to get rinsed here. I'll move my stop to break even and take partials here. I'm not taking partials until we get down to here. And then I took partials here, and then at 20, the 20 level right there, right? So this was the major, was it on the 1 hour? Yeah. So see the 1 hour, I just had that marked out and I said, yeah, okay, I'm just going to take it at 20, big figure. Didn't really care. I saw the divergence and stuff. So I was like, yeah, whatever, I'll take that. Now, what do we get when we're here? This is something really, really super interesting. And actually on my broker, it was a little bit different. And so what we saw, what I saw here anyways, was this, was we hit off that zone. And let me go to the 15 minute actually. And I'll take off all this stuff because again, it's not important now. You guys know, you guys understand why that happened. But what are we seeing here? This is when I was telling you that, look, we have an impulse, strong impulse, consolidation, and move up. Okay. Now, this is a classic bull flag. So if people are going to be entering retail, likely going to be entering above 5, 10, 20 pips, right? Stop losses below this low. That lines up perfectly with our analysis of where we can see price feeding back into. So I'm thinking at this point, how is a retail trader trading this? Well, what do we have? Support resistance here, clear level of support and resistance right here. Okay. So, and what do we get? Right? We get a retest, and look at the 5 minute. What's this? Bullish engulfing, right? Bullish engulfing. So I really, as soon as this closed, I could have entered right there because I know that we get a break off support, we get bullish engulfing, and then I could easily take a short right off that because I know that that's where retail is going to enter their longs, literally at that exact level. They're going to be entering their longs. And so I can put my stop maybe 2.5 pips up, and I could have easily taken that just based off of the 5 minute, right? If you wanted to be a little bit more comfortable with the trade, which I was going to do that, but I said, no, I'm just going to follow my parameters because I used to do that. That's how I used to trade. I used to just wait for that, but now I just have my refinements and I just wait for them. Okay. And so basically on the 5 minute, now we have this order block. And so now on the 1 minute, what do I see? Well, if you guys are curious about how to use the new ICT concepts that he's been teaching, well, here it is right here. Okay. So for me, I saw this, not inducement. I saw sweep. So two liquidity sweeps right up into a point of interest. We break a nice swing point right here. Okay. So this is going to be our BMS, break in market structure, or BOS, break up structure. And then what are you looking for on the new ICT content, right? What is it? So let's start off at the 3 minute. What do we see? Well, I see a nice imbalance right here. We also have this big sweep candle right there. Okay. So that's one. Let's go down to the 2 minute. That's on the 3 minute, sorry. 2 minute. I don't see anything too much, right? If we want to refine, we go to the 1 minute and look at this. Okay. So this is your last up candle. This is what I entered off of. Okay. Right here, we have another imbalance. So we have a combo between the last up candle before the down move, and we have an imbalance. So I actually entered directly off of this because on my broker, this wick was much smaller, and this 50% of this order block, or sorry, 50% of this imbalance was directly at that level. So for me, that's where I entered. Okay, I entered right there. Stop loss above this high. Again, if it's 3.3 and you have a 0.3 spread, just go 3.6. Like Don't be greedy. Incorporate your spread. Don't be a dummy. Okay. Where are we looking? First level that I'm going to be looking at is going to be these equal lows down here that, right at, or that caused this essentially this leg up. If you break the legs down, you see this 1, 2, 3, 4, 5, right? Why this one? This is just a complex pullback right here. Sorry, this right here. This is an impulse. 1, 2, 3, consolidation up. Okay. So this whole leg. So this is the leg that I know that there's been accumulation of longs, break and retest. If they're potentially going to be taking this trade, their stop's probably going to be coming under here, right? And so that's going to be a first area of interest. At the same time, I know that this low contains every single one of these lows, right? You can see it here, right? This one does as well. So one of these levels, this one or this one, price is going to go target. So that's why as soon as we broke under here and we hit this level, this little imbalance right there, that was my first take profit. Second take profit, I waited to get down here. And then once it got to the 220 and I saw that candle reject, I was like, okay, I'm done taking it out. No point in being greedy for 2 pips. Like, it's just absolutely absurd. Okay, so let's see, down to here was 5.36. I actually was looking at this right here. Okay, this little order block thing there. So 6.28, 8, basically 8R, then 20 was right there. Okay, 9.42. That's all. That's it. There's nothing else. That was a great trade intraday. That's all I need to be trading, and that's all I need to be profitable. This was a great trade. Like, look at the timing of it, right? Look at the timing of entry. Look at the timing of getting out in this short amount of time. How much time is that? In 24 minutes, we hit 9.42R. That's absurd. That is absolutely absurd. Like, people will wait all year to make that, and it's just incredible of what we can do. It's just all about reading the structure and reading the context, because again, here's just another kind of example of why it's more important than just strong highs and strong lows and weak highs and stuff like that, right? It's because what's this right here? We have consolidation, sweep up, break down. We come back up into it, right? This looks like it could be your trading range. There's more to it, guys. It's your entry criteria, right? You have your entry parameters, but you have to understand the global or the context of the entire scenario. And the entire scenario for me is bullish to go take out liquidity, and to go reach for liquidity, or the draw on liquidity is going to be somewhere up into these levels, right? Potentially higher, potentially it's going to keep going, right? Potentially this is going to be the low, and this was the corrective structure right back down to the origin. And now the next thing it's going to go do is take out this high. I have no idea. All I know is what I was anticipating today was this, and I'm happy with that. I'm done, right? I take my partials, I get the hell out. And that's it. So I hope that this was super clear, guys. And I'm going to end it here before my dog goes insane. And yeah, we'll chat soon. Thank you guys so much again for the support. And that's it. Cheers, guys.